Hello, everyone. Welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Note the change in schedule here. This is not my decision. This was Bookmap's decision to reduce my stream down to 2 days a week. So at the end of last year, I was streaming 5 days a week. Early this year, it was changed to 3 days a week, now 2 days a week. Again, this was Bookmap's decision. You can see the trend here. If you find value in my stream, if you want this to continue, please join me in Discord. That was what Bookmap is looking for, is more people to join my stream in Discord, Bookmap Discord. More about that in just a minute. So again, please join me in Discord. Before I go any further, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. And that's just another benefit of joining Bookmap Discord. And I'm also on X. My name there is @DougPless. All right, I've got a few announcements. Again, Bookmap is encouraging everyone to join Discord. It is still free. You do need to subscribe to Bookmap to fully participate in chat and watch the streams on Discord. There is a free subscription of Bookmap available. That is, again, a free version. And you will need to verify your account, and then you can join Bookmap Discord. You can watch streams in Discord. You can fully participate in chat, in my chat room, as well as many others. All right, more announcements. First of all, Bookmap is hosting an institutional trader series beginning today. Here's the schedule. Starting today again, going through Friday. You can go to bookmap.com for more information. Next announcement, Bookmap is announcing a futures trading competition, trading scary size. And you can sign up here, competition.bookmap.com, to get $1 million in sim money to trade. And then finally, more news: beta programs, Blue Jacket competition, and Bookmap Academy. That is on Thursday after the market closes. I believe that is Discord only. And go to bookmap.com for more information. All right, on with the presentation. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. Certainly the large cap tech stocks, like the Magnificent Seven stocks that I trade and follow, as well as the equity index futures, like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades, and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades, and they hedge their delta exposure within Q futures. The focus of my presentation today and the focus of the Options-Jug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And for setups, and when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Jug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Hector, Stephen, Caesar, Ikajed, JW. Welcome, glad you're here. Very glad you're joining me in Discord today. Here's my agenda for today, Monday, October 21st. First of all, I want to go over news items, economic data, and events for the week. Then I'll go through my positional analysis for today. Then I'll review some setups from earlier today, very interesting setups. And then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know. I'll be glad to do that. All right, let's get started with news items. Very light week as far as news goes. Let's just take a quick look. So news, really, the economic data event begins on Thursday. Jobless claims. Yeah, let's see. Jobless claims, 8:30 a.m. Eastern Time. S&P Services and Manufacturing PMI, 9:45 a.m. And then on Friday, durable goods orders. And Michigan consumer sentiment, durable goods at 8:30, and Michigan consumer sentiment 10 a.m. Also, let's take a look at the earnings chart. And note that Tesla does report earnings after the market closes on Wednesday. So we can hover over that. All right, so again, Tesla reports earnings after the market closes. Fairly small expected move, 6.32%. All right, so that's the news for the week. Really get started after my Wednesday webinar. All right, let's move on to positional analysis now. I'm going to start with the S&P 500. This is the ES Futures and Bookmap. We'll talk about these setups in just a few minutes. Very nice short. So again, we'll talk more about setups in just a few minutes. And before I take a closer look at this chart, I do want to take a look at a higher time frame. I'm going to go to the SPX, the underlying index, start with a one-day chart. 1 hour, 1 day chart, 1 year's worth of data. You can see the recent pullbacks. There's the August 5th low, right around 51.19, pullback to 5,400, put wall. Note the pullbacks are getting smaller and smaller as SPX continues to make new highs. All right, so that's 1 day chart. Now let's take a look at a 30-day 1 hour chart. This is the pullback to the 5,400 put wall, actually just above that, and it was actually a pullback to the SPY 540 put wall. Consolidation range. Right around 56.80 to 57.65. Week before last, SPX broke out above that level and now consolidating again. All right, let's take a look at the levels on this chart. First of all, the expected moves. Weekly expected moves shown with the dashed purple lines. So that is based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX again from Friday. Note I do post those levels in Discord every day the evening before, so another benefit of joining Discord. And note SPX did trade below the lower daily expected move today. And D, that is why you don't want to set automatically set a limit order at that level. You want to wait for confirmation. All right, the dark red lines in this chart are showing Spotgamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers. They're available on a variety of trading platforms. Again, this is Thinkorswim, 30-day, 1-hour chart. I'm going to point out the key daily levels. First of all, here's the put wall at 5,700. That's a strike with largest net negative gamma that can be expected to act as support. And note that level did move down from Friday. Next level up is the volatility trigger VT at 58.45. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And note, SPX is trading just around that level, so it has traded above and below that level today. And that level did move up from Friday. Next level up is 5,900. That is the call wall. That's a strike with largest net positive gamma that can be expected to act as resistance. And that's also the absolute gamma strike. That's a strike with largest absolute positive and negative gamma. So potential floor for price at 5,700, potential ceiling at 5,900. And the absolute gamma strike also moved higher. So for the S&P 500, for SPX and SPY, volatility triggers both moved higher. Absolute gamma strikes both moved higher. And for SPX, the put wall moved lower. So I would say slightly bullish shifts higher in levels for the S&P 500. I'll talk more about my thesis for the day in just a minute. All right, let's wrap up our view of SPX with a 1-minute chart showing the levels in play for today. So there's that volatility trigger that I talked about, 58.45, SPX trading above and below that level today. Here's the lower daily expected move. Price sliced right through it, moved back up, found support. Note some consolidation at the volatility trigger on the way down, and then it looks like support on the way up. All right, let's go back to Bookmap now. Quite a range today. Let's talk about levels, then I'll talk about setups in a few minutes. So on the upside, there's the SPY 585 absolute gamma strike call wall. And just a quick note, I do have my own cloud notes here in Bookmap, so I can show SPY levels, SPX levels, as well as key ES levels, all on the same chart. And note there is a difference in price between ES and SPX. Right, today it's right around, up and down around 41 points. So I'm showing SPX 5850, that's a large gamma 3 level that was noted as support. I think support and resistance in the Spotgamma AM Founders note, maybe support. So I've just labeled it as support and resistance, somewhere between the lower end of the range and the upper end of the range. Right now, it may be acting as resistance. But anyway, there is a 41-point difference between ES and SPX. So I'm showing SPX 5850 at ES 5891. And I do post those index relationships that I'm using every day in Discord. So again, another reason to join Discord. All right, so on the upper end, this SPY 585 absolute gamma strike call wall price did not quite make it up there. Also a SPX resistance level just above that. And then on the lower end, a couple of key SPX levels, this 5820 noted as support. Also this Spotgamma implied lower daily move. And price did not quite make it down to those levels as either. Whoops. And you can see all the liquidity coming in. Those are limit buy orders in the order book right there. And it looks like traders were front running that liquidity. And we can see that a little bit higher, a little bit easier on this copy of ES Trader Map Lite that eliminates this. Let me turn this up. So you can see all this algo activity that kind of obscures the price action. All this algo activity. Sorry, I keep reaching for the pointer. So what I do is I tone down the heat map in my main chart. And then if I see some liquidity like this, limit buy orders, then I go to the Trader Map Lite version and I can see that much more clearly. Clearly, limit buy orders. Aggressive buyers were front running that. All right, so that's the range for the day. Now the S&P 500 trying to break above that 5850 level. So more about setups in just a minute. Let's go to the NASDAQ. Then we'll get back to setups. Pretty similar picture here. And actually, let me point out that the initial rally began right around 8 a.m., right around the 58.45 volatility trigger. All right, back to NASDAQ. Similar picture, but more bullish in the morning. Support right around the lower daily expected move. That's for NQ, and also the 20,350 level. And that was before the cash open. And the move accelerated at the cash open, right at the QQQ 493 volatility trigger. Oops. Found resistance in this cluster of levels, then traded back down to that 8 a.m. low. All right, let's take a quick look at the underlying index charts so we can get a little bit more clear picture of the index levels that are in play for today. Let's start with QQQ. Here's the cash open. Support right around the 493 volatility trigger. And resistance right around 496 and that combo level just above it. Note 495 is the absolute gamma strike. And QQQ trying to make it back up to that level. All right, let's take a look at NDX. Again, a pretty big range today. It looks like the NDX 20,200 acting as solid support there. So it looks like 3 tests of that level, and now moving higher. Here's the volatility trigger at 290. All right, for NASDAQ, just like the S&P 500, volatility triggers moved higher for NDX and QQQ, and also absolute gamma strikes moved higher for NDX and QQQ. So across the board, NASDAQ and S&P 500, absolute gamma strikes and volatility triggers all moved higher. And for NDX, the call wall moved lower down to 20,300 right there. CW. All right, back to NASDAQ. So again, I have my own cloud notes, so I can show NDX levels, QQQ levels, as well as key NQ levels on this chart. All right, we'll get the setups in just a minute. Let's wrap up our positional analysis by taking a look at gamma. I'm going to go, this is the data table at the bottom of the AM Founders Note. Let's just take a quick look at this. Gamma notional for the S&P 500 and NASDAQ 100 at the beginning of the day. So remember, Friday was options expiration, call dominated expiration. So some of that positive gamma did come off over the weekend with the expiration on Friday. So these numbers, with the exception of NDX, did move lower, but not significantly. So pretty small options expiration all around. So for SPX at the beginning of the day, this is market maker's position on the gamma curve at the beginning of the day, was still positive for SPX and really neutral for SPY, NDX, and QQQ. All right, so that's market maker's position on the gamma curve at the beginning of the day. Now let's take a real-time look at gamma. I'm going to go to the Spotgamma trace tool. This is new. So there are 3 views here, 3 heat maps. This is the first. This is gamma. So this is showing a real-time view of market maker's gamma notional. The blue is positive gamma. So SPX, this is for SPX only, and positive gamma right now. And note I have zoomed in pretty tight, just about a 70-point range. We can zoom out just a little bit. So if we zoom in too much, it looks like it's a little bit difficult to interpret. But it's definitely in positive gamma, blue zone. And you can see the large gamma strikes, 58.40. I'll talk more about that in just a minute. And 58.55. All right, so for today, largest so far, right in this range, the largest gamma strike is at 58.40. I'm going to zoom back out. So that's the current view of gamma notional, positive gamma for SPX. All right, my thesis for the day, there were two. I would say the primary thesis would have been bullish based on the shifts higher and the volatility triggers and absolute gamma strikes for both the NASDAQ and the S&P 500. Second, alternate thesis was bearish based on the options expiration, call dominant expiration, all that positive gamma that helps to support that market. Some did expire on Friday, and that certainly helped to loosen up volatility today, provide that positive gamma supporting that market, the market up and down was removed, leading to more volatility for today and a very nice trading day. And for those of you who are Spotgamma subscribers, I would refer you to the Spotgamma AM Founders Note. They have Spotgamma has been looking for a little bit of equity weakness consolidation after that expiration. And again, I will refer you to the Founders Notes for more detailed explanation of that. All right, so let's move on. Let's take a look at some setups now. I'm going to start with the S&P 500. And the first thing I'm going to take a look at is what options traders are doing today. All right, so far today there have been three main legs: up, down, now up again. All right, so again, I'm moving on to real-time data now, moving on to execution. Starting with the S&P 500, I'm going to, again, take a look at what options traders have been doing today. And this is the HIRO chart, HIRO, Hedging Impact Real-Time Options. This is available to Spotgamma subscribers. Very valuable tool. So let's take a look at this. I'm actually on the equities chart. Let me go back to the S&P 500. I'll start with the index chart. This is the first HIRO chart that we can take a look at. What this chart is showing is options trades and market maker hedging activity in real time for a combined signal of SPX, SPY, XSP, and ES futures. This is the index signal when traders buy and sell puts and calls in these index products. Market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. There are two lines on this chart. The white line is price for SPX. The purple line is the HIRO signal. And a falling HIRO signal indicates traders are taking negative delta options positions. They are buying puts and or selling calls. Market makers take the opposite side of those trades and they have to sell ES futures to hedge their delta exposure. A rising HIRO signal indicates traders are taking positive delta options positions. They are buying calls and or selling puts. When market makers take the opposite side of those trades, and they have to hedge their delta exposure by buying ES futures. So that's the index signal. There's another signal that we can take a look at for the S&P 500. That's the equity signal. And as usual, showing a little bit more correlation with price in the afternoon. In the after mid-morning is pretty typical. All right, so what this chart is showing is options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. Again, there are two lines on this chart. The white line is price for SPX, and the purple line is the HIRO signal, combining puts and calls into one combined signal. All right, let's open up full screen now. I'm going to go back. I'm going to start with the index signal. I'm going to shift to puts and calls, go back to the index signal, and let's take a look at this. Zoom in just a bit. So what this is showing is traders from the open up until about 10:15, 10:20. They were buying calls. That's shown by the rising. I keep grabbing the wrong pen tool. Sorry about that. Traders are buying calls and buying puts. So far, it looked like in the morning the call buyers were a little bit more in charge. Price was rising. We'll take a look at that in Bookmap in just a minute. Note this flow alert that comes in. And that was right around 10:17 where that flow alert came in. And after that flow alert, the call signal. Now note the flow alert is shown on the call signal, but it's not dependent. It's not just on calls. It's put in calls. So after 10:17, note the call line starts moving lower. The blue line, the put line, continues to move lower. So after 10:15, the blue line and the orange line were moving the same direction. That's a very powerful directional indicator. In this case, it was bearish. All right, let's shift over to the equity signal. So again, this very timely flow alert right before the shift. The flow alert gets your attention, and for the S&P 500 especially, it can often act as a mean reverting signal that overall hedging flow is about to shift from positive to negative. All right, let's take a look at the equity signal now. So again, remember, flow alert comes in 10:17. Take a look at equities. Here's another flow alert. This one comes in even earlier, 10:08. And note this call peak. This is a very reliable signal, a bearish signal. So initially, traders were buying calls and selling puts. And then that hedging flow shifts to bearish. Two flow alerts on the index and equity signal. And then traders start selling calls, start buying puts. Price moves lower. Here's another flow alert signaling a potential reversal in the hedging flow again. And that works out as well. All right, let's take a look at Bookmap now. Go to the S&P 500. Let's zoom in. So note the uptrend continuing, began 8 a.m., continues after the cash open. Let me zoom in on this just a little bit more so we can get a little bit more clear view of what was happening. All right, the volume dots in Bookmap show market buy minus sell. Green volume dots indicate more buyers than sellers. Magenta dots more sellers than buyers. So you can see right around 10:17, buyers are exhausted. Aggressive sellers starting to come in. Also, large traders selling with iceberg orders. That first icon there, that's 520 iceberg orders, 6 executions. Those were sell iceberg orders. Large traders, again, used to hide their size. You can see the blue line that's showing iceberg orders in the subchart start to fall, move lower. Let me zoom in just a little bit more. Maybe this make this a little bit more clear, this reversal. All right, so you can see the trend break. Large traders selling with iceberg orders, shown by the following blue line. Cumulative volume delta shown by the dark blue to magenta line starts to fall, and then sell stop orders help to fuel the move lower. So a clear shift as Hero shifts from bullish to bearish. Aggressive sellers start to come in. Large traders start selling with iceberg orders. Price moves lower. Let's go back. Let's take a look at one other piece of information. And this is we'll go back to the trace tool here and take a look at delta pressure. All right, I'm going to step back in time. All right, the blue area is market maker buying pressure. And the red is market maker selling, so buying support below in the blue, selling pressure above. So I'm starting at 930. You can see S&P 500 already rising from this blue area. And this is also showing the S&P 500 index signal, which includes ES and SPX, which trade options before the cash open. So let's step through in time here. Let's see. Oops. All right, so you can see how the blue had been following S&P 500 higher. Hero signal rising. And now starting around 10 o'clock, you can see that blue buying support starting to disappear and SPX approaching this red zone of selling pressure. Step through a couple more steps. All right, so selling pressure had started to increase. This is at 10:30. So you can see it a little bit in hindsight, but the Hero signal was pretty clear, both the equities and index signal. And price reverses lower as it approaches that, it leaves the blue buying support zone and approaches the red selling pressure zone. And you can see the shift in the Hero signal there. All right, let me check for questions. Hunab in YouTube, sorry if I'm sure I'm mispronouncing your name. Welcome. Glad you're here. Since sometimes I see in Founder's Note negative gamma notional for QQQ and in Hero a positive Hero number in the last 24 hours, which is more precise. All right, so Hero really doesn't have anything to do with gamma directly. So this negative gamma in the Founder's Note, that is static data that's updated once a day. That's based on open interest that's updated once a day, sometime during the night. And then Hero is real time. So I would always, the tools that I'm looking at now, this gamma, delta pressure, this is real time. And trading today, I would certainly focus on this rather than gamma notional at the beginning of the day. All right, so I hope that answers your question. All right, so there's that short setup. Leaving the blue zone, approaching the red sell zone. And again, the S&P equities and index signal both showing traders were taking negative delta positions. And as price starts to drop toward this is the Spotgamma implied one-day move low. You can see the buying pressure building and price moves higher. All right, so let's go back to real time. All right, so that's the S&P 500. Options trades providing a very strong clues, as well as order flow on Bookmap. And here again in Bookmap, if we go back to Trader Map Lite, we can see the high liquidity right around 58.63, something like that. And aggressive buyers come in, front run those limit buy orders in the order book, and price moves higher. All right, back to ES now. Let's take a look at NASDAQ. And let's take a look and see what options traders are doing. So note, this is only for SPX, so this will not be much of a help with the NASDAQ. Hunab, you're welcome. Also ask, delta pressure is the pressure of market makers or retail traders. So that is market makers buying support and selling pressure. So that's market makers, but they're responding to retail traders. That's the heat map is showing market maker, again, buying support and hedging, selling pressure. Oh boy says charm chart shows beyond current time. Can you please explain it? I will refer you to Spotgamma. Go to spotgamma.com, take a look at the free resources, and you can also go to the Spotgamma YouTube channel for more information on Trace. They've done a couple of presentations at least that are available on YouTube. And we'll take a look at Charm in just a minute. All right, so let's move on to NASDAQ. All right, so there are two charts, just like the S&P 500. There are two charts we can take a look at for NASDAQ. First, the index signal, combined signal of options trades and market maker hedging activity in NDX and QQQ. And then the second signal is the Mag 7 signal. This is very similar to the S&P equity signal, which is actually the Mag 7 plus 493. We'll start with the NASDAQ signal. Go back to full screen. Note here, there's a little bit of a call peak. Traders buying calls, take the foot off the gas, start buying puts, and that's when the index move lower, the NASDAQ 100. So call buyers take the foot off the gas, start buying puts, price moves lower. Mag 7, much more distinct call peak, just like the SB equities. Traders buy calls. 1017, start selling calls, start buying puts, price moves lower. Let's go to Bookmap. I'm going to zoom in a bit. So a couple things very important on this Bookmap chart. First, you can see the change in volume dots. Aggressive sellers start to come in. Buyers are exhausted. Small green volume dot. Aggressive sellers start to come in. Price moves lower. Confirmed by the falling cumulative volume delta. Also very important, large traders were fading this move up with iceberg orders. That's shown by the falling light blue line. So as price was moving up, large traders were selling this with iceberg orders. Note they're trading a few contracts at a time. Note that steady decrease in the iceberg line. And price finally reverses lower as the options traders start taking negative delta options positions in the Mag 7 stocks as well as the index components. Price moves lower. And then find support at that NDX 20,200 level that we saw on the NDX chart, as well as the NQ lower daily expected move. All right, let's take a quick look at some stocks, then we'll get to the live market. First stock I want to take a look at is AMD. Let's see what options traders are doing. Let's go to AMD. AMD, another call peak pattern. Call buyers come in for just a few minutes, right around 9:55. Quickly exhausted, flow alert comes in. Hedging flow shifts from bullish to bearish. Traders start selling calls, price moves lower. Another flow alert, and again the hedging flow shifts. Traders had already started selling puts, start buying calls, and AMD moves higher. Let's go take a look at Bookmap. There's AMD. Note 155 is the hedge wall. Also a liquidity target. So for this move lower, this trend break, there were two targets for price. First at 155. Note there's a limit buy orders that come in the order book. And for equities, they come in typically at the just a few seconds after the cash open. Liquidity targets at 155 hedge wall, and they did not quite make it down to the 154 level. And again, remember, traders started buying calls and selling puts. Selling puts first, price reverses higher, back above the 155 hedge wall. Next stock, Meta. Meta one, let me tone down this volume dots just a little bit. Make it a little bit smaller. All right, for Meta, 575 hedge wall. Good entry point for a short. This light blue line is VWAP. Price finds resistance at the 575 hedge wall. VWAP moves lower, down to and through the 570 put wall. Finally finding support. And now moving higher. Let's see what options traders are doing. Go back to Hero, Meta. So it looks like all call-driven price action today. Traders selling calls. Flow alert comes in as just after Meta breaks below the 575 hedge wall. Let's zoom in on this just a little bit. There's the flow alert. So all call driven today. Put line pretty flat. Traders sell calls, price moves lower. When traders sell calls, market makers buy the calls. They have to sell stock to hedge their delta exposure. Then right around 11:30, traders start buying calls, selling puts. Price moves higher. All right, back to Bookmap. Now maybe trying to make its way back up to the 575 hedge wall. Let's take a look at Microsoft. And here's the short setup in Microsoft. Just a bit. So from the open, puts and calls pretty flat. Call peak comes in right around 10:08. Traders start selling calls, buying puts. Flow alert comes in as price really starts to accelerate lower. Down and through the 475 hedge wall. Let's go take a look at Bookmap. Go to Microsoft. There's the break lower. Flow alert comes in as traders start selling calls and buying puts. Targets at 415 liquidity and 414 liquidity. Last stock, NVIDIA. Bullish day in NVIDIA. We'll see that call buyers definitely driving price. And Caesar and WRB, we'll get back to Trace in just a moment. We'll wrap up with NVIDIA and Tesla. Let's go to NVIDIA. Call buyers in the morning. Flow alert comes in, get your attention. Rising orange line. Price moves higher. There's that 1017 peak. Traders start selling calls. Price consolidates. Now they've started buying calls again. Price moves higher. Note the put line is pretty flat today. So move up. A little bit of a move down. Consolidation now. Call buyers coming back in. You can see all the aggressive buyers, all the green volume dots, rising cumulative volume delta. Another bullish day in NVIDIA. And primary targets for this initial move higher. Liquidity targets at 141, 142. And note that 140 was the key gamma strike. And that was taken out pretty early today. Did act as support later on. Good launching point for a later long entry. Finally, Tesla. Initial bullish move higher up to the 225 hedge wall. Key gamma strike. Then options traders took their foot off the gas. After that quick move higher at the open, let's take a look and see what they were doing. Let's go to Tesla. Very clear here today. Starting right around 940, traders are selling puts, buying calls. Didn't last very long. Took their foot off the gas. Now, as price hit the 220 hedge wall key gamma strike, now price consolidating as the blue line and orange line have flattened out. So quick move up to the 220 hedge wall key gamma strike. Primary liquidity target. Now price consolidating, actually grinding lower. All right, let's go back to the S&P 500. There's several questions about trace. Let's zoom into the current price action. All right, you can't see it there, the label for 58.40. That's actually covered by the label for the ES, lower daily expected movement. That's also the 58.40 level. So let's go take a look at trace and see if we can figure out what's going on. So I'm going to go back to trace. So first of all, delta pressure. Looks like the S&P 500 moved up toward the red zone again. You can see these contour lines sloping down a little bit. So selling pressure building as time passes. And that's also confirmed by the falling hero line. That's that purple line there. All right, so that's delta pressure. And Hector is asking about the stability index. It looks like that has disappeared for some reason. Let's go to gamma. Let's see if it'll... No. Oh, there it is. Stability index, that's very high at 91%. That is typical of positive gamma, but there seems to be more movement than I would normally associate with a 91% stability index. So Caesar, I'm not sure if I can answer that anymore. I just don't have enough experience yet with trace. It's only been out for a few weeks. Let's go back to delta pressure. Oh, there it is, stability index. All right, delta pressure now showing somewhat of a neutral area. Red above, blue below, and kind of this black area right around the hedge wall. You're welcome, Caesar. Hector says, when trace gamma is all blue, would you expect some long consolidation? When gamma is positive in a blue zone, I do expect typically more mean reverting price action, lower volatility. That's the general expectation. All right, let's take a look. First of all, focus on this gamma bar right here. This is at 58.40. Let's step back in time a little bit. So this is market maker's position. Positive gamma, that means traders are negative gamma, positive theta. That means they have been selling puts there at 58.40. So I went back to, let's go back to, let's say noon. And we'll focus on this bar right here, 58.40, the largest in this range, in this price range, largest gamma. And we'll step through and see how that has changed. All right, so right now that is definitely the largest gamma bar on the board in this current price range. Now let's take a look at the charm chart. And what this chart is showing is charm. That is the change in delta as time passes. This is going to be focused on 0 DD options, options that expire today. And I guess, oh boy, all I can tell you is the practical use of this is looking for a potential pin area at the end of the day, typically between these red and blue zones. So what this is showing, highest gamma notional on the board here at 58.40, and also a potential pin zone between the red right above at 58.45 and the blue at 58.35. And note that we'll step back in time on the charm chart as well. And see when that started to build or became more apparent. So really starting about noon, that is becoming more apparent. So again, largest gamma notional right at 58.40. Charm is showing potential pinning at that level at the end of the day. Let's go back. Let's wrap up with a view of Bookmap. Let's go back to delta pressure. Then we'll go to Bookmap. All right, so still in a neutral zone. Hero is falling. Again, this is the index signal. Let's go to Bookmap. So now ES is broken below the 58.45 volatility trigger. There's that 58.40 level. That's also, again, the lower daily expected move for ES. All right, last call for questions. All right, everyone, I want to thank you very much for watching. In between Bookmap and Spotgamma, Trace and Hero, I believe these tools provide a significant edge. Just seeing what the options market is doing, where these levels are building, and then what options traders and traders are doing in real time on both Bookmap and Hero. All right, everyone, thank you very much for watching. Have a great afternoon. Remember, please join me in Discord. I want to thank everyone who is watching in Discord today. This really helps me out, helps you out if you like these webinars. If you want to continue to see these webinars, again, thank you very much for everyone who has joined me in Discord today. Have a great afternoon, and I will see you on Wednesday. Bye.